Hey everyone, welcome back to Corporate Decoder, where we decode the hidden meanings behind those big company reports. We're diving into an 8K filing from NNN REIT Incorporated, and it looks like they're not just doing business as usual. They're also lining up some serious cash. So what is the big news today? NNN REIT Incorporated is not exactly a household name, but they are a real estate investment trust. Think of them like a company that owns and operates a bunch of income. Producing properties, they are filing a Form 8K, which is basically a heads up to investors about important company events that are not expected to happen regularly. This filing is dated the 17th of December 2025, and it tells us about a couple of significant financial moves. The main event here is that NN REIT Inc., or as the report calls it, the company, has entered into a term loan agreement. Basically, they've agreed to borrow a big chunk of money. This new loan is for a whopper of $300 million, with the option to borrow even more, up to $500 million if they decide they need it. This is a senior unsecured borrowing capacity, which means it is not backed by any specific assets, making it a bit riskier for the lender, but potentially more flexible for the company. The loan has a maturity date of the 15th of February 2029, but they can actually extend it for 2 more years if they want to. Now, let's talk about the cost. Based on their current credit ratings, the interest rate will be SOFR, which stands for Secured Overnight Financing Rate, plus an additional 0.85%. But that rate can change depending on how the credit agencies view the company's financial health. In anticipation of this loan, they've already locked in a SOFR rate of 3.22% through January 2029 using financial instruments called forward starting swaps. This is a smart move to protect themselves from rising interest rates. They plan to use this borrowed money for general corporate purposes, which is a pretty standard reason for taking out a big loan. It is worth noting that they have not actually borrowed any money from this new loan yet, as of the filing date. Like most big loans, this one comes with strings attached. There are what they call covenants, which are essentially rules the company has to follow. These include limits on borrowing more money or putting liens on their assets. They also have to maintain certain financial ratios, like a maximum leverage ratio, which measures how much debt they have compared to their assets, and a minimum fixed charge ratio, which shows if they can cover their interest payments and other fixed expenses. There are also standard clauses for things like loan defaults, and a breach of these rules could mean the entire loan becomes due immediately. But that is not all. The company also made an amendment to an existing credit agreement. This might sound a bit technical, but essentially they've tweaked a previous loan agreement. The key change here is that they've removed something called a 10 basis point SOFR credit spread adjustment. A basis point is 1/100%. So this change effectively removes a small additional fee related to the SOFR interest rate. This is likely a positive for the company, as it could reduce their borrowing costs slightly. Now, for the nitty-gritty, the filing lists 2 main exhibits that provide the actual legal documents for these agreements. Exhibit 10.1 is the term loan agreement itself, and Exhibit 10.2 is the amendment to their credit agreement. These are the official contracts that lay out all the details of these financial arrangements. This term loan agreement is a pretty substantial document. It details the terms under which NN REIT Inc. can borrow up to $500 million. The agreement is with Wells Fargo Bank National Association acting as the administrative agent and a group of lenders. This first amendment to the third amended and restated credit agreement is also a critical document. It modifies the terms of an existing credit agreement, specifically by removing that 10 basis point SOFR credit spread adjustment that we mentioned earlier, which is a beneficial change for NN REIT Inc. So what does all this mean for NN REIT Inc.? On the surface, securing a $300 million loan facility is a sign of confidence from lenders. It gives the company significant financial flexibility to pursue its growth strategies, whether that is acquiring new properties, developing existing ones, or refinancing other debts. The accordion option, allowing them to increase the loan amount, shows they are planning for potential future needs and growth. However, it is crucial to remember the restrictive covenants and financial maintenance requirements. These are in place to protect the lenders, but they also limit the company's operational freedom. If NNN REIT Inc. fails to meet these covenants, it could lead to serious financial trouble, including the acceleration of the entire loan. The fact that they are taking on more debt, even if it is unsecured, means their leverage ratio will likely increase, which is something investors should keep an eye on as it can increase financial risk. The amendment to the existing credit agreement, while seemingly minor, removing that 10 basis point adjustment is a small win that lowers their potential interest expense. It shows that even in ongoing financial agreements, companies are actively seeking ways to optimize their costs. In the broader context, NN REIT Inc. operates in the real estate investment trust sector. This sector can be sensitive to interest rate changes and economic cycles. By securing this loan, NN REIT Inc. is positioning itself to potentially capitalize on opportunities that may arise, especially in a fluctuating market. The fact they've entered into these agreements suggests they have a strategic plan for growth and are confident in their ability to manage the associated financial obligations. Looking at this filing, my take on NN REIT Incorporated is that they are a company actively pursuing growth and financial optimization. The new term loan provides substantial capital, which is a positive indicator of lender confidence and a tool for strategic expansion. The flexibility offered by the accordion option is a smart move in anticipating future needs. However, the company must diligently manage the associated debt covenants and financial ratios to avoid potential negative consequences. The removal of the SOFR credit spread adjustment from their existing credit agreement is a small but welcome reduction in their borrowing costs. The main risk here, as with any significant debt financing, is the potential for increased financial leverage and the strict adherence to covenants. If market conditions change unfavorably, or if the company's performance falters, meeting these obligations could become challenging. On the opportunity side, the readily available capital allows them to be agile in a dynamic real estate market, potentially acquiring attractive assets or undertaking development projects that could drive future returns. In conclusion, NN REIT Incorporated is making a bold move to secure significant funding. This positions them for potential growth and strategic initiatives. Investors should monitor their financial performance closely against the covenant requirements and keep an eye on how they deploy this new capital. Alright, that is our breakdown of NN REIT's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this debt will fuel growth or create future problems? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate documents. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.